Hello, students. I believe that you are able to see the screen properly. Can I please get a confirmation from you all in the chat box if my voice is audible from your end, and technically the screen is also visible from your end? I believe that is fine from your side. Thank you. Just a minute, students. Okay. So let's start doing the questions, students. Thank you. So students, this is our question we have. So don't worry about the results, students. I will effectively mark your answers and give it to you all. But just build your confidence level and understand the basics very well, that this examination, what you're doing is more towards an application oriented examination rather than a knowledge based examination. But still in the exams, in order to score well, you have to have some technical knowledge as well to score well in the examination. So since we have already done this for a time period, as I told you, students, whenever you go to the exam, you should focus on two things. One is known as the answer planning, and the other one is effectively what did I understand statement. Understand it very well, students. The other thing that you have to focus is on what did I understand the statement. Now, students, if you observe here, firstly, explain why this acquisition may result in an increase in the WACC for Happy Well, and what are the impacts we may face in case the WACC increases. Now, students, it's a technical question, and they're effectively asking on the weighted average cost of capital. Now, if you are strong, don't worry, you will become strong. So I'll write down here, increase in WACC, and the other one is impact on the increase. So that is one factor for your understanding. Increase in WACC and impact on the increase. That is one factor for your understanding. Now, secondly, explain the difficulties we would face when trying to calculate NPV of the project on acquiring Villatic Hotel. Now, they are not asking you to calculate the NPV. They're effectively asking you the calculated challenges you may face when calculating the NPV. So I'll write down here, challenges faced when calculating the NPV. Challenges faced when calculating what, students? NPV. Can I get a confirmation from you all in the chat box, students, if you are able to understand the task, because task understanding is very, very important. So for this, I can give around 20%. For this, I can give around 30%. And can you all remember the rule? 10% means like one paragraph. And for this, I can effectively give 50%, the challenges that we may effectively face, Now, students, before I go into the detailed application of this question, I'll take some time to explain to you, students, what is WACC a little in understanding point of view. So students, I'll just take your time. Can I get a confirmation in the chat box if you can see the screen, students? Can I get a confirmation from you all? Yeah, you can see the screen. Now, students, you need to understand, I'll just do a basic idea about WACC. Already WACC is there in our LMS. the Google Classroom, you can see the explanations for that. But WACC generally means weighted average, what students? Weighted average cost of capital. Weighted average, what students? Cost of capital. Weighted average cost of capital. Weighted average cost of capital. So that is the point of view here on WACC. Now, if you observe, if you see WACC students, technically it's easy, but logically it's even easier. Now, if you observe the basics of accounting, a company will have asset which comprises of the equity finance, the money that was given to the company by the owners of the company, and also the money that was taken through loan. So equity finance and debt in simple language, or liabilities. We technically use the term as what students? Liabilities. We call this as liabilities as well. Now, students, in a situation like this, let's assume the equity value is 600 and the debt value is 400. The total value of this company's asset effectively will be 1000. This is financial accounts. But students, if I convert this into financial management, it will be value of firm. Value of firm, or in simple language, we call this as capital employed. What is this, students? Capital employed. Capital employed is generally the funding that you put it into the organization. So if you observe in this calculations of value of the firm capital employed, let's do in this form. Now equals, if I'm not mistaken, the value of equity. Now value of equity, students, whatever that is contributed by the shareholders, plus we have something called value of something called what, students? Value of something called what, students? Debt. Now students, in this case, let's observe. In this case, let's observe how the things effectively works out. Now students, if you observe the same logic, let's assume 600 is the value of equity, 400 is the value of debt. So what will be the value of the organization? 1000. That is very clear now, students. I believe that is nothing for you all. Now, in a situation like this, a company where there has been an equity contribution, where there has been a debt contribution, what happens is very practical. Now, the equity contribution and the debt contribution, people don't give it free. Everything has a cost. So when someone gives you an equity for your business, what you pay in return for them is called what, students? Is called what, students? Dividend. What you pay in return for a debt is called what, students? Is called what, students? Interest. So debt, interest, equity, dividend. Now, the dividend and the equity total, we call this as total expected return. Total expected return. The total values of this. That is total expected returns. Total expected returns means what the investors, the debt investors and the equity investors expect from a business. Now, let's assume, students, a basic calculation. Dividend is 10% and the debt is 5%. So interest rate is 5% and the dividend is 10%. So students, in that particular case, if you observe 5% of 400, that will effectively give you 20. And students, this is effectively $60. So the total expected return in value is how much, students? $80. And this $80 is expected for an investment of 1000. So if I convert this into a percentage, what happens is it comes at 8%. That means, students, in this organization, what effectively happens is these investors in this particular case are expecting 8% in average as a return, which we call that as what students? Which we call this as what students? Weighted average cost of capital. Now, let's assume students, you are investing in a project. Now, if you are investing in a project, students, what happens is, if the project, what you are investing is yielding, if the project you are investing is yielding more than 8%, you have to accept the project. Example, a project is giving a return of 15%, and the expected return is 7%, better to accept it, because even after you pay the returns to the investors, the company will effectively have a 7% what students? Retained cash flow. 7% what students? Retained cash flow. Students, can I get a confirmation from you all in the chat box if you are able to get this ideology of what is WACC, students? Can I get a confirmation from you all in the chat box, students, if you are able to understand the point of view what is WACC? So WACC is, in simple language, the expected rate of the return what the shareholders and the lenders are expecting. If I'm not mistaken, I'll just give you a case study so that it's very interesting, students, the reason why a finance knowledge is essential. Now, if you see in Sri Lanka, what happened is China gave a lot of loan. China gave a lot of loan to Sri Lanka. And they know when they gave loan to Sri Lanka, they know what will happen also. And they were confident that these people will do something opposite. Now, example, when China gave the loan, in Sri Lanka, they constructed a tower and they were competing with Burj Khalifa. And that's a wrong decision if I'm not mistaken. The tower, you can just check in internet. It's known as Lotus Tower. It's a loss-making tower. 0 people go to that. And if you see, that's one reason, no return coming. And effectively, the economic crisis took place. And another thing that took place was they constructed an airport where there is no one to go, because you can just check in the internet called Ghost Airport Sri Lanka. It's a huge airport inside a jungle where only elephants and chimpanzees go. So effectively, students, how China planned it, they gave the money, they had a return, and they were not concerned about what investment project the government of Sri Lanka was making. And effectively, this was one of the reasons the economic crisis affected the nation. Can I get a confirmation from you all in the chat box, students, if you understood these applications, students? So I will give you that point of view. Thank you. Now, students, one thing I have to be a little more sincere in this explanation is, students need to understand 2 things. Now, one thing is the value of equity is expensive. The value of equity is generally what, students? Expensive. I'll tell you why. Because dividend has something called a growth. When the company grows, the percentage of dividend also grows, correct? But if you see, debt is always cheaper. Debt is always what, students? Cheaper. The reason why debt is cheaper is, debt is always what, students? Interest is always what, students? We call that as fixed interest. Interest may never change. So get that logical understanding before we start applying the question. So this is the WACC question, and generally in the examination nowadays, they are not asking you anything related to the calculations, anything related to hardcore technical. The examiner is just going through these section again. And if you say interest is tax deductible, they say that's a good point. I don't say nothing wrong there. But in real life, the issue is, although it is tax deductible, it depends on the tax regime. Because there is a tax, I can say, cap in simple language. Because in certain countries, there is a tax cap. Cap means the maximum interest that you can deduct. Now, let's assume you have a highly debt. You are going to deduct a very high amount by evading or avoiding tax. The government will always have a tax cap. But actually, that's correct. There is nothing wrong. The interest has a tax deduction as well. So perfect. So students, I am going back to the question. Can I get a confirmation from you all students? If you are okay with whatever has been written, can I get a confirmation from you all? I'm going back to the question. Excellent. Thank you very much, students. Thank you very much. Now, students, coming to the question. So if you observe, we have to check why there can be an increase in the WACC. And the secondary part is we have to make sure the impact of the increase in WACC and the challenges that we may face when calculating NPV for this particular project. Now let's start going through. Lee Qing Wai has sent you the mail to finance manager, demand for acquisition by Vilactic. Now students, thank you very much for the previous analysis and the risk evaluation of the goodwill estimation calculation. It was a really great insight from your end. The board has considered all the factors you have mentioned, and currently they are planning to acquire the hotel. Please refer the reference material. So now we are planning to acquire this hotel, that is Vilactic Hotel we are going to acquire. Now students, understand it very well. When there are challenges in NPV, you should little be aware about the business acumen that is there. Hill station, first time we are going there, those things must be remembered. So now let's go through the reference material, what they are stating. Now in the reference material, it is very clear. We have done the extensive research and the staffs have also visited Falun, where they have been able to see the hotels and resort physically. This is a very unique location and there are many positive reviews from the customers who have stayed. Therefore, the board is considering to acquire this firm since there is a great chance for a differentiation strategy in the market. So in the first paragraph, if I'm not mistaken, what did I understand? So as I told you students, never go to the exam. When you go to the exam, don't read, you forget. So always write, what did I understand? What did I understand? Because this is something that every student should ensure that they are doing very, very well. Now in the what did I understand students, if I'm not mistaken, can I come with the explanation? So the first thing is the board is planning to what students? Planning to acquire what students? Vilactic. Planning to acquire Vilactic. Are you clear with that? Yeah. And then the next thing, if I'm not mistaken, students, there is a physical inspection. There is a physical inspection and the staffs are happy with the location in Falun. So there is nothing wrong at the moment. I believe that is also very, very clear for you all. Now let's continue. As per the discussion we had with Mr. Joseph, the founder of Vilactic Hotel, he has initially rejected the cash offer. And he wants the investment to be in the form of share exchange that worth 80 million. So I'm going to write down here the demand of Mr. Joseph. The demand of Mr. Joseph is share exchange. Is what students? Share exchange, which is $80 million. I believe this is fine for the students. Can I get a confirmation from you all in the chat box if you are okay with that? So this share exchange has an impact to our WACC. So I will just make sure I connect it. So this statement has more relationship to our question mark. So I'll write down here, this has more relationship towards WACC. Because when you're going to issue a fresh new shares to the employees, there are heavy chances that the equity balances may increase. When the equity balances are increasing, there are high chances that the dividend also needs to increase in the future as well. The board is very much concerned with the offer made by Mr. Joseph since he has requested for equity consideration. Therefore, the cost is generally higher in the equity consideration since it is subjected to dividend as well as there can be growth in the value of the shares as well, which may also impact the existing shareholders' wealth causing a major dilution for the firm in the share ownership. Also, the board is very much curious about the impact that could have on the WACC. So in simple language, students, they are telling the issues that will be facing. Dividend must be paid. Dividend must be paid plus capital gain. They have the opportunity to have what, students? Capital gain. Now, these are the money factor that is affecting. And the other thing, if I'm not mistaken, is students, existing shareholders. So I'll write down here, students, existing shareholders. Who are the students? Existing shareholders. So I'll write down here, existing shareholders, existing shareholders, existing shareholders, existing shareholders, dilution in the share value. Dilution in what value, students? Share value. I believe that is also very, very clear for that. And there are impact to the WACC. There are impact to what, students? There are impact to the WACC. I believe that is also very practical and very clear for you all. Further, the management has also requested an NPV analysis, since we need to consider whether it is worth to have a share-based consideration scheme. However, we are facing some challenges in the estimation of the NPV due to the nature of business. I believe that you can advise me on the above areas as well. Now, students, I believe everyone is very clear at the moment. So currently, the question is very clear. The trigger point is the share exchange value. The share exchange value is the trigger point at the moment. So we have to make sure the question requirement. So if I'm not mistaken, why acquisition? So I'll write down here, why acquisition increase, why acquisition increase the WACC, why increase the WACC? How will this acquisition increase the WACC? Get it clearly, students. How will this acquisition increase what, students? Increase the WACC. How will this acquisition increase the WACC? And the second thing, students, in case if there is an increase in the WACC, what will be the impact? How are we going to handle that impact? That is another part of that. And the challenges faced when calculating the NPV. The challenges faced when calculating the NPV. Now, my suggestion is don't type answers and go without doing a brainstorming. Because students, brainstorming is very critical, because when you're going with the auto suggestion mode, there is high level chances, students, you will miss out many points. So please make sure that you are doing this very much practically to the particular situation. Now, students, why acquisition increase the WACC? Why acquisition increase the WACC? So I'll write down here, the starting point is I have to explain a guidance on something called the WACC. I need to explain WACC. That is very important. And then I have to mention Mr. Joseph's demand. Mr. Joseph's what, students? Demand. And then, students, I have to explain how, if I'm not mistaken, equity increase will increase the WACC, because we are not going for any loan or anything like that. How that will increase the WACC? And when the WACC is increased, what are the impact that will happen? So the impact that will happen in simple language is, if the WACC increases, students, in simple language, there will be something called, in simple language, the expected return will increase. The expected return will increase gradually. That is one thing. And the next thing, students, if I'm not mistaken, there is something called IRR, internal rate of return. I will explain that to you. That may also increase. That may increase. The IRR may increase, because, students, it will go up, because then it will be a bigger challenge. And then the payback period will increase, because when the cost of capital is very high, students, you will not get any money for the company to recover the investment. So payback period will increase. And the other thing, if I'm not mistaken, the NPV balance will reduce effectively. And finally, students, what happens is the cash retained position. The cash retained position will also reduce. So students, can I get a confirmation from you all in the chat box, student, if you are clear with this point of view? Now, don't compare my standard with your standard. Please don't think I'm a genius. I'm not a genius because I am the person who has already prepared this question. So I can do the questions better. Don't think that I'm a genius. You are more talented than me because you are doing without knowing the question. I am just doing it with the referencing of the question which I prepared by myself. So students, I believe that is also very, very clear for you all at the moment. Now, students, I'm coming for the next one for your understanding and application so that it will become very, very easier for you all to understand. Challenges faced when calculating NPV. Challenges faced when calculating NPV. Now, for this Vilactic Hotel, okay, so I'll write down here for Vilactic Hotel, that is the current hotel we are in. Vilactic, what students? Hotel. The challenges what we face in this Vilactic Hotel. So the basic challenge, can someone tell me what is the important challenge? Very fundamental important challenge. What is that? Quickly, can someone tell me, students, in the chat box or in the mic? What is the biggest challenge in calculating NPV in this particular case?
Forecasting cash inflow.
Technical, very technical, but good, but
forecasting
less
cash inflow because of currency fluctuations.
Excellent. Full marks.
Currency
Correct.
fluctuation because it's in a different country.
Excellent. So the first biggest challenge, thank you, Mr. Jose also has mentioned, foreign currency exchange rate fluctuation. Correct? No? Yeah. Exchange rate fluctuation, since it is which country, students? Which is since in Fallen. This is the biggest thing. And the next thing is inflation factor in Fallen. Correct, no, students? Yes or no? Will Fallen have inflation? Maybe inflation factor in Fallen. That is another biggest challenge that we will be facing. These are economic challenges. And then, students, if I'm not mistaken, let's come with the other challenges in simple language. The other challenges is hill country demand estimation. Correct, no, students? Hill country demand estimation will be another big challenge because, students, we do not know any demand from that hill country station at the moment. And the other point of view is hill country cost will be challenging. We don't know how the challenges that we may face in the hill country cost as well. And the other thing is, students, the niche segment for this tour. Now, example, students, if you observe currently, most of our people go for a tour called what, students? 3S, Sand, Sea and Sun. So this will be also one more challenge. Any other challenges, students, you all mention? You all can let me know, students. Any other challenges you all were able to mention, if you don't mind? Any other challenges from your side? Is this fine? Or anything that you all wrote, you can let me know in the chat box. But foreign currency is a very, very important challenge. So, students,
I was just wondering with the increase in WACC, whether that will have any impact
on this NPV, right? If I'm not mistaken, will that affect it? Frankly, yes, it may affect it. But one thing in this case, be very careful. That is correct, but should not be duplicated. But correct. Other students, any other points that you were able to write? Can I get a confirmation if these are fine with you all? Because students, I am having a very perfect brainstorming because I am the person who does the question also. So don't compare me with you because I am feeling you are far better than me when it comes to this examination because you are doing the paper before you read anything. You don't know anything. So can I get a double Y in the confirmation? Can I go with drafting the answers if I'm not mistaken, students? Can I go ahead with the drafting of the answer? Excellent. Thank you. Thank you very much, students. Thank you very much. Thank you very much. So I'll write down here, students, the answer. And as I told you, basically follow a little bit of formal approach. So I'll write down here email, and I will just mention from finance manager, and it's going to be two, if I'm not mistaken, it's going to be Lee, what students? Lee Quing Wai, correct? And students, subject evaluation of WAC and challenges in the NPV calculation for Galactic Hotel. I believe this is very practical, very clear. And then I'm going to write down here date 22nd April 2023. Students, I will make this as a full screen. It will be very easy for everyone. So I'll write a small introduction. As requested, the impact to the WAC has been explained in detail, and also the challenges in estimating the cash flow, for the Galactic Hotel is also explained. Students, let's come to the detailed writing. So shall we start working on this? Can I move ahead, students, if I'm not mistaken? Yeah, so let's write the answer very detailedly. So I'll write down here the first one. How will the WAC increase based on Mr. Joseph's demand? Mr. Joseph's demand, a question mark. It will be very nice, students, if you can just draft very like this type. The first thing I'll write down here. Generally, WAC is the expected rate of return from the investors or the finance providers. Therefore, in general terms, the WAC will be affected in case if there is a change in the capital structure. Change in the capital structure. So I'll write down here debt over what, students? Equity, comma. Now, students, I'm going to continue this explanation very detailedly so that it will be easier for you all to understand. Therefore, in practical, the equity funds are compensated with dividend and capital gain. Therefore, the equity fund is more expensive than the debt fund. Since in the debt fund, the only return that is paid is the interest cost. Students, I believe that is very, very clear for you all. So I will move forward with the next explanation. Mr. Joseph is demanding for a share exchange worth 80 million. Therefore, this may have some impact to the capital structure, since the equity balance may increase in case if we are issuing shares to Mr. Joseph. In case if we are issuing shares to Mr. Joseph. Students, I believe that is very, very clear for you all. Can I get a confirmation from you all? So the capital structure changes, debt or equity changes. So that will be a bigger impact. You get that point. Thank you. So students, I'm continuing this more in detail. So it will be very easier for you all to understand it in more clearer manner. I'll write down here. Therefore, Mr. Joseph will be able to get a dividend income and also a capital gain as well. However, the existing shareholders' investment may get diluted in case if there is an issue of the shares. Therefore, in the worst case scenario, the share price may fall if the cost of capital is not increased. In simple terms, the expected dividend will be asked to increase by the shareholders in case Mr. Joseph is getting stake. Mr. Joseph is getting stake. Students, can I get a confirmation from you all in the chat box, students, if you are fine with this point of view? So this will how the share price will, the WACC value will go up. Correct, no, students? One person is coming to your business. He's only bringing a hotel, and that hotel is from another country. So generally, the existing shareholders will be confused on what to be done. So I believe that is fine. So can I move forward with the next explanation, students? The impact on the increase in WACC. So can I continue with the next sentence if you do not mind, students? Yes or no? Can I get a confirmation? Yeah. How will the increase in the WACC impact Happywell? That is the second question. So let's move forward more in detail. Happywell is a listed entity. Therefore, they will always present the internal rate of return of the firm. That is the rate at which the company may have an NPV at 0. An NPV at what, students? 0. Students, quickly, I am going to explain to you IRR so that it will be very clear for you. I am not going for the detailed technical explanation, but I will just guide you what is IRR. Now, students, if I'm not mistaken, I'll just write down the heading. Can I get a confirmation from you all in the chat box if you can see the writing book, students? Can I get a confirmation if you can see the writing books? I'm writing internal rate of return. Thank you. Thank you for your confirmation. Internal rate of return. Internal rate of return. Internal rate of return. Internal rate of return. Okay, it's not so complicated, students. So this is just a graphical presentation. This we say as the WACC, the weighted average cost of capital. And here it is 0. This side, you will always get a positive NPV. And this side, you will effectively get a negative NPV. Now, students, I will explain the relationship first. Now, let's assume the WACC is 0. Whatever the company gets, that will be the NPV. Example, a project is giving a total return of 1,000. What will happen is the company will also get 1,000 because the investors, the funders are not expecting anything. So if the project is 1,000 worth project, the company will effectively get 1,000. Are you clear with that, students? Can I get a confirmation from you all in the chat box? In case if the NPV is 0, the cost of capital is 0, what effectively happens is everything, whatever you make, will be to the company, 100%. Now, technical learning. Now, let's assume the cost of capital is 2%. Now, the same example. Now, if the business is yielding 1,000, you have to subtract 2%. And the balance, now I'm doing my own numbers. So the balance is 960. So 40 is taken over by the investors. Did you understand that calculation above, students? Can I get a Y in the chat box? In case if it is a VAT, the retained earnings will slowly reduce. Thank you. So likewise, students, if it is 4%, it will go down. If it is 6%, it will go down. If it is 8%, it will go down. If it is 10%, it will go down. If it is 12%, it will go down. If it is 14%, it will go down. If it is 16% also, it will go down. I believe everyone is very clear with that point of view. Now, let's assume like this. Let's assume this graph will be always downward sloping. This graph will be always, what, students? Downward sloping. This graph will be always downward sloping. So I'll just make it like this. So students, if you observe, if the graph is downward sloping, students, get this point, you will see there is a cutoff point of 10%. And what I will do in simple language is I'll just make sure the above area is in green. The above area is in what, students? Green. The above area is in green. The above area is in green. Okay, you are seeing here, the above area is green. The above area is green. Okay, it is green. And if you observe the below area, which if I'm not mistaken, with your permission, I will make it as, I'll just check whether do I have any other colors. 1 minute. Yeah, there are some colors. So I'll make this as, you are observing, it's a different color. So this section, which is almost in the red color, will always give me a negative return. Correct, no, students? Yes or no? So this side will give me a negative return. I'll write down here minus. And this side, where you see the green color, this will always give me what return, students? Positive return. I believe that is practically clear for the students, right? Can I get a confirmation from your students if you are fine with that? But if you see one thing, students, this area, this 10% will give you NPV of 0. That means that is the red light. That 10% is the red light It's not same. It depends on business, projects, company, everything. But this 10% is the red light. In the red light, what it is saying is, don't go anything above 10% because you will not have money to pay your investors and the business also will not have any money. So IRR in simple language is the rate at which the NPV becomes break even. The NPV becomes what, students? The NPV becomes what, students? Break even. Students, can I get a confirmation from you all in the chat box, students, if you understand this properly? Can I get a confirmation from you all? Now, students, let's assume for a very good company, students, when the IRR if it is going up, that's good. But the thing is, in this case, now let's assume when the WACC is increasing, now when the WACC is going up, technically, if it is a good company, they should also ensure the IRR also shifts. If the IRR is not shifting and the WACC is increasing, the risk is increasing. Correct, no, students? When the IRR is not changing, but the WACC is increasing, observe it clearly, WACC is growing, IRR is constant. IRR is constant, no change. It is a straight line. WACC is going up, IRR constant. What happens, students? What is the objective there? The risk. What happens, students? Risk increases. Are you understanding that point of view of what is IRR? Can I get a confirmation from you all in the chat box, students, if you are clear with this basic point of view? So the risk will increase at the end of the day. Excellent. Thank you very much, students. Thank you. So students, I'm going back to the question. Can I get a confirmation from you all? Yeah, I believe all are fine with that. So I'm going back to the question. So I'll write down here. Therefore, when the WACC increases and the IRR doesn't change, does not change, there is a very high risk to the company, since the margin of safety will generally be less. Therefore, the IRR needs to increase in order to manage the change in WACC. In order to manage the change in the WACC. Are you fine with that, students? Can I get a confirmation from you all in the chat box, students, if you are fine with that IRR explanation? Yeah, that is very, very important. Then, students, if I'm not mistaken, I'll just write down the payback period. The payback period is the time taken to recover the initial investment. The initial investment. Payback period is the time that is taken to recover the initial investment. Therefore, in most cases, when the WACC increases, the payback period time also increase. The payback period time also increase, where it will be a bigger challenge for the investors to recover the initial funds of any business proposal. Initial funds of any what, students? Business what, students? Proposal. Understand it very, very clearly, students. Because how we increase IRR? Very simple. We have to go to profit-making projects where the profits are very, very high. So we can't go with normal projects. We have to go with very high profit-making project. When your WACC is increasing, you have to increase the returns or the cash flow that is coming from the project. Thanks for that question. I believe that was clear. So students, therefore, in this case, for Happywell, This too can be a challenge. This too can be a major challenge. This too can be a major challenge. Students, I believe that is practical and clear for you all. Can I get a confirmation from you all in the chat box, students, if you are fine with that explanatory note there? Thank you. Thank you very much. Thank you very much. And then students, moving to the next one, if I'm not mistaken, is NPV balance. So I'll write down here. Net present value is the balance of cash flow after discounting for the expected returns. Therefore, in that case, there is high level of risk that the NPV may reduce, since the expected returns are very much higher. The expected returns are very much higher for the company. Therefore, the WACC increase may have a direct impact to the company as well. So students, can I get that also? That is also done. And then students, if I'm not mistaken, I will just move forward, and effectively the cash retained may reduce. Therefore, in case of any interim dividends, there will be no funds as well. Also, in case of a maintenance, there will be no funds as well. Students, because hotel maintenance, flight maintenance, all are there. So even in that case, there will be an issue. So can I get a confirmation from you all in the chat box, students? If you are clear with these notes, whatever that has been mentioned, can I get a confirmation from you all in the chat box, students? If you are fine with that, excellent. Thank you very much, students. Challenges faced when calculating NPV for Vilactic Hotel, 50%. So that is one more factor that we have to consider. Foreign currency exchange rate fluctuations since in fallen. So I'll write down the next one. The challenges faced by Happywell in estimating the cash flow. Okay, let's start working. The biggest challenge that Happywell may face is that they may have to translate F dollars to W dollars, since fallen currency is having some volatility as well. Therefore, the major challenge will be the exchange rate fluctuation. Students, can I get a confirmation from you all in the chat box if you are getting that point, students? It's very important challenge. And students, I'm just summarizing this so that it will be easier for you all. Further, there can be other factors like inflation and the changes in the interest rate to be considered as well. Therefore, in that case, these factors may also affect the shareholders well. I believe that is also very clear for you all. Thank you. Thank you. Now I'll just summarize the other one. So I'll write down here. Further, since this is our first venture in hill country, there will be major challenges in estimating the demand and the occupancy rate in the hotel. And also, the hotel can be exposed to seasonal demand as well, since hill stations are generally a vacation area rather than a city area for business. And then students, I am going to continue. Also, the expenses estimation may be another challenge. Since we are using the staffs of Villatic Hotel. Therefore, there can be price hike since the supply of labor in the hill station is generally less. Is generally what students? It's generally less. Therefore, there can be some challenges in cost as well. Since it is a hill country, there can be damages due to landslide, correct no students, landslides and other natural disasters as well, which is generally uncertain. Therefore, it will also be a major challenge. Correct no students, yes or no? Definitely. Finally, this is a new trend we are forecasting. Therefore, in the initial stages, the demand will be low. Since it is new from 3S model. It is new from 3S model. Therefore, there are chances this differentiation model can work out or cannot work out. Therefore, this can be one more challenge as well. Students, can I get a confirmation from you all in the chat box, students, if you are clear with these points here? So this is what is expected. And don't worry with the results you're getting in the mock. Just use the mock for the practice purpose. And definitely you will do well, students. I'll do the core activities on Wednesday. I'll start with that. So today, no mocks for you all. I'm giving break. I'll do the co-activities. I'll teach you what are the questions that can come in the examination. And definitely with everything what we do, you will be confidently clearing this paper. So I'll talk to one students at one time. If you have any questions, you can ask me. So the first person I'm going to talk is Mr. Asanka. Do you have any questions for the day?
No, sir. Thank you.
Thank you. Mr. Jose, any questions for the day?
I have a question.
Yes, please, Mr. Jose.
If you share for a particular person, is there any market regulations?
No, I'll tell you like this, Mr. Jose. Now, if you look at a company, I'll just guide your doubt. It's a very good doubt. Now, Mr. Jose, you'd have seen there are like this. They say share capital. Correct, no, Mr. Jose. You'd have seen share capital. And then there is something called share premium also. Correct, no, Mr. Jose. Now, let's assume share capital is always issued at nominal value. Nominal value means government required. Minimum value is this. Like if I'm not mistaken, Mr. Jose, in banking industry, they have minimum bank account balance, no, Mr. Jose.
Yeah.
Likewise, a company should have something called minimum balance to be listed in the company. So let's assume they have $1 nominal share and they are issuing 10,000 shares. Their authorized share capital is 10,000. Authorized share capital is 10,000. That means this is an approval from the government, 10,000 shares. Okay, and let's assume the value of this 10,000 shares that is authorized, if I'm not mistaken, is $1 only. Now, of this 10,000 shares which is authorized, company can issue any much of shares they like to the general public. Now, let's assume this company has issued 6,000 shares. Okay, so the base price of one share is how much? $1. Now, what happens is 6,000 is a limited number. So demand will be higher than the supply. Correct? No?
Yeah.
Demand will be generally higher than the supply. So what happens is when the demand is higher than the supply, they will have a premium. Correct? They will have a premium, and that is only known as share premium. Now, what has happened is in the market, $6,000 or 6,000 shares are circulating. Total shares that is in the market is 6,000 shares. Correct?
Yeah.
So what's going to happen is if this 6,000 shares is sold to another investors. Now let's assume Mr. Jose has 500 shares and you are selling your shares to Nufail. Okay. So 300 shares you sold to me. In this case, there won't be any issue to the share price because already issued shares are only getting sold to one party to another party. But the biggest challenge happens is now of these authorized shares, let's assume company is going to give 2,000 shares specifically to Mr. Joseph, like in our case study. So if they are going to give to Mr. Joseph, now what is the total issued shares? 8,000. Correct? No? So 8,000 shares are circulating. So when the 8,000 shares are circulating, what happens is this dilution will take place. There will be something called dilution take place because now you have to share the dividends between 8,000 shares. So in a nutshell, if I summarize this, the logic of this is taken from economics. Now, if you see Mr. Jose, a country, let's assume a country like India and Sri Lanka. Okay, Mr. Jose. Now, what happened to Sri Lanka was the governor in Sri Lanka published so much of notes. Currency publishing became high. You understand what I'm saying, Mr. Jose? When the currency publishing is going high and the production, goods and services are not increasing, what happens is dilution will happen. Are you understanding, Mr. Jose? Now, in India, currency publishing doesn't take place. Even in Bangladesh, currency publishing doesn't take place at a rate. Every month, you all don't publish unless and otherwise that is needed. And one more additional knowledge I will give you all. So, students, let's assume they have issued 10,000 shares to the market. Now, authorized shares 10,000 fully issued to the market. Okay, everything is issued to the market. But still company may need money in the future, correct? No? Yes or no?
Yeah, sure.
Now, then what you have to do is, you have to again go to the government, take a permission, and you have to again increase your authorized share capital. So once you increase your authorized share capital, what generally happens is, in simple language, if it is a good decision, then there won't be any issue. But just increasing the authorized share capital will be like excess of publishing the currency note. Is that fine, Mr.
Yeah,
Jose?
sure. Value will go down.
And final thing is this share capital. Why there is something called share capital is in case of liquidation, company getting bankrupt. This share capital money will be always being kept for the safeguard of the bank. Bank will get money from the share capital. I'll just prove it and show it to you. Now, if you observe in our case study, now you see share capital and share premium they have mentioned. Let's assume it is the total share capital. Let's assume for this case, share capital only, let's assume 1,000. Just check the loan. Loan is only how much? 600. Are you understanding? Now,
Yeah.
the loan is only 600. But if you see, what is the property value here? Property value is how much? 6,886. But generally, bank will never look at the property and give a loan. Bank will always look at the share capital and only give the loan. You get what I'm saying?
Yeah.
Now, if you see in this case, example, if you see our company, you see our total share capital value is how much? 2,500.
Yeah.
And the loan we have taken is only how much? 2,100. But what is the total asset base? 11,398. But generally, many people misunderstand thinking bank give loan based on the asset base. Generally, no. Bank will always give loan based on the share capital base. That's the correct value. Now, Kingfisher Airlines in India, I think they defaulted the banks because banks gave loan not on the share capital. They gave loan on the property values. Are you clear with that, Mr. Joseph?
Sure.
Thank you.
Thank you.
So the next person, Dr. Shadmin, any questions?
Sir, I'm all right. Are we having a class tomorrow or on Thursday?
Thursday.
Okay, that's all right.
Thank you. Mr. Gugu, any questions for the day?
No, sir, I'm fine. Thank you.
Thank you. Mr. Linon, any questions for the day?
I'm fine, thank you.
Thank you. Mr. Ferdas, any questions for the day?
No, sir. Thank you.
Thank you. So thank you very much, students. I'll meet you in the next class on Thursday, co-activity 1. Just go through that I can statement as well. Take care, students.